Welcome to the Audit Statement by RSM. My name is Peter Cadigan. I'm an assurance partner focused on consumer products companies. I'm also an industry analyst as part of RSM's Industry Eminence program. One of the big topics we're thinking about is mergers and acquisition. And here with us today is Kevin Brady, our audit policy leader. So Kevin, why don't you give yourself a quick introduction and tell us what an audit policy leader is?
Yeah, so I'm the audit policy leader for RSM in the consumer products practice, and that means I'm responsible for providing our consumer products auditors the resources, the tools, the guidance that they need to effectively and efficiently audit companies that are within the CP space.
So let's start talking M&A, right? So we're hearing a lot about, the deals that go through have good management teams, solid operations, tight financials, and also adjustments that are relatively straightforward. When you're thinking about the audit season, right, and preparing for an audit, how does that really play into what management teams should be thinking about?
Yeah, sure. And it's funny, it seems simple, but the easiest indicator to see if a company has good management, it's operating effectively, sometimes is just the timeliness of how they can provide information. And that includes how quickly they can close their books at the end of a month or a quarter at year end. That can go a long way to showing that the finance function is operating effectively. Additionally, how does a company handle significant unusual transactions, specifically business combinations? Because if a buyer is coming in now with to a company, they are probably going to be acquisitive in their first few years, trying to build the company up and ramp that up. So can a company's accounting and finance team handle that? How quickly are they integrating new subsidiaries into their existing systems? How quickly is the opening balance sheet information available and closed out so they can move on to the next transaction in 2025 and going forward? And then the other thing to consider is not just timeliness, but the reliability of that data. So what information management has been providing in their debt covenants and internal reporting to third parties throughout the year. You want to make sure there's no surprises at year end and that you don't want significant audit adjustments. So you want to make sure you're providing the cleanest data of it imaginable to anyone throughout the year that is looking at it. And in addition to that, just the ability to support those EBITDA adjustments that you have within your internal reporting. They're all entity specific. Every company has different add backs that they're doing. And how easily can you provide that support to someone who's looking at your numbers, and how quickly can you explain it to them? No one's going to want to sit down with 15 different targets and hear an hour-long explanation of what their EBITDA adjustments are. So the quicker you can explain those and show to a potential buyer what those adjustments are and that they make sense, that the easier the process is going to be for you. An example I like to use is in the retail space when we have a new store or multiple new stores during a year. How does management understand the life cycle of a new store, when it's going to be fully up to speed and to its full potential? And then are there other investments that go into their other capital projects? Are there renovations? Are there other things that need to be considered in those projections that are going forward? So just make sure that that is all clean, good data, and it's coming in a timely fashion, and that can get you on the right path.
Great. And when I hear clean, good data, when I hear about reliability and speed to close, I think, the auditor in me thinks internal controls. And I know that may not be the highest area priority for our privately held middle market companies. So, as we're thinking about the management team, our clients, what would you advise them to think about with regard to controls?
Sure. I think the biggest thing in the control environment is how scalable, how flexible are your controls in terms of, can you pull information in off-peak time that you don't typically do? Can you do a reconciliation at a month end when it's typically a quarter end or year end item? Or are you able to pull information mid-month if someone is calling to ask what your AR inventory looks like? And some of the things management needs to consider there that buyers are going to be looking at are really specific to inventory and revenue, the two big things in our consumer products environment. So how clean is your existence information? How good are your controls around there? Are you doing cycle counts? Do you have significant adjustments during your year-end inventory count where you may need to be counting more frequently to make sure those records are clean? And then if you're using third-party logistics companies or co-packers, how good is the information you are getting from them? How frequent is it? And is your company able to reconcile it? Is your team reconciling frequently enough to have good records there? And on the revenue side, if you have revenue arrangements with customers that are on a calendar year end, there is an estimation process that will have to go into play at any quarter end or month end that you're going to need to be able to apply to make sure that you have the right accruals on your book so that a potential buyer knows what they may potentially be on the hook for after a transaction that happens mid-year. So just keeping those things in mind and making sure your team is flexible to do their work at an off-peak cycle is really important to a buyer.
Great. Any other ways that internal controls could impact a potential transaction?
Yeah, so any buyer during due diligence is going to get copies of the management letters from your audits over the last 2-3 years, which include the internal control letter. So your goal is to have as clean internal control letter or no internal control letter as possible to provide to them. But you also want to show, if you've had findings in the prior years, that you've remediated those findings in the current year, and anything identified in the current year, you've remediated as well by the time the transaction is going in. So having those conversations now with your auditors who are currently in the process of doing their walkthroughs, doing their risk assessment, really understanding your control environment, understanding whether they've identified anything at this point that you can remediate prior to either year end or prior to any transaction occurs will go a long way to helping a buyer feel more comfortable with the control environment.
Great. Yeah. Great, Kevin. And so last question, you gave us a lot of information, a lot of things that we could be doing right now to help support a potential transaction. But, a lot of our middle market clients have lean, mean finance teams. What would you advise those types of clients that maybe have a finance team that's already stretched thin as it is?
Yeah, I would advise that now is not the time to hesitate to spend money to help support those teams. And there's a couple ways you can do that. You can do that with outside consultants who are able to do outsourced accounting for you, really beef up your control environment, help with some of the complex transactions to free up your team for the information they're going to have to provide during the diligence process. Because the benefit of having those outside consultants, those outside experts come in far outweighs what the cost would be, especially when we're thinking in terms of ROI and whether this is going to help us actually close on a transaction in the near future. The other area is with technology. Right? You should consider what products are out there, but you also really need to consider what your needs are, what your end goals are. A lot of people want to go in and say, well, we're using AI now. And buyers aren't just looking at companies that are saying they're using AI. It's how are you using AI and how has it impacted the business positively so far? So it's going a step further. So you want to make sure that you have a clear, focused data strategy and that any technology you're bringing in aligns with that strategy. You don't just want to bring it in to say you have it, you're using it. You really need a clear, focused strategy there because that's what people are looking for in the marketplace.
Great. That's fantastic information, Kevin. Thank you very much. I think there's a lot of takeaways for management teams, for buyers, and for sellers. So thank you very much for joining us today. And thank you for listening to the audit statements by RSM.